silver is an incredibly important metal, and China is a major supplier, and that means that they can squeeze all of the tech, all of the AI infrastructure that's going in, all of the solar and batteries and things to power electric vehicles and so on. This all requires silver. And if the West is using more than it produces, and the world is using a whole lot more than we produce, stockpiles are getting low, and then China can put a squeeze.
I do think we are going to get a massive blow off top in the next 2 to 3 years, going up to something like $600 an ounce.
Wow. Yeah, I'm betting on at least $200 an ounce, but we could see a spike that goes up toward quadruple digits.
Over the past several months, silver has been moving with a conviction that stands in sharp contrast to the broader commodity space. While gold has captured headlines with repeated nominal highs, silver has quietly, but consistently, outperformed nearly every major metal on a percentage basis. Its advance has been driven by a convergence of forces that rarely align at the same time: tightening physical supply, expanding industrial demand, shrinking Western stockpiles, and geopolitical intervention from the world's largest producer blocs. Mike Maloney's latest analysis makes that convergence unmistakable, and it points to an environment where silver's upside potential is no longer theoretical. It is becoming structural. One of the most significant developments is the policy shift inside China. Beginning in 2026, silver will fall under formal export control as a key mineral resource, placing it in the same strategic category as rare earths. That means Chinese refiners and miners, who together account for a meaningful share of global primary and byproduct output, will need government approval before shipping silver abroad. The timing matters. Chinese exchange inventories have been falling for 5 consecutive years, mirroring a global drawdown that began in 2020. When you pair declining above-ground stocks with new export controls from the world's largest industrial hub, the message is unmistakable. Beijing intends to treat silver as a national asset, not a simple industrial commodity. The United States, after years of hesitation, has arrived at the same conclusion. In its 2025 update, the U.S. Department of the Interior added silver to the federal list of critical minerals for the first time in history. This designation is not symbolic. It signals federal recognition that silver is essential to national security, energy infrastructure, and technology resilience, from solar panels and EV batteries to defense systems and advanced semiconductors. In effect, Washington has publicly acknowledged what investors have known for years. The United States consumes far more silver than it produces, and the gap is widening as industrial programs accelerate. These policy changes are landing at the exact moment when global supply is structurally unable to keep pace with demand. In Maloney's assessment, all of these pressures build toward a far more aggressive move ahead, not the incremental grind that precious metals investors have become accustomed to, but the possibility of a genuine blow-off phase. If you're new here, make sure to subscribe, leave a like, and share this video with anyone who follows precious metals markets. This is one of Maloney's most data-rich breakdowns in years, and you'll want to follow this entire sequence from beginning to end. Thanks for tuning in, and enjoy the video.
So far, it's just a couple of central banks. But central banks aren't complete idiots. I mean, they are pretty dumb. They do stupid things. They have corrupted the world economy. They keep us chained into this absolutely flat out evil monetary system that enslaves us and always produces more debt than there is currency to pay the debt. But like I said, they're not completely stupid. They know about the gold-silver ratio. They know that silver is incredibly undervalued. They have been accumulating gold. And, one of my strategies has been to accumulate silver now, and then at certain gold-silver ratios, I'm going to be turning some of that silver into gold. I think a lot of the central banks will be looking at around trying to accumulate more gold, knowing that there is a problem coming with fiat currencies and just the monetary system in general, the markets and so on. And the best way to get ahead of the curve is to try and get as much gold as possible, but with gold already up at the prices that it's up at, they're looking at that thinking that, even though it's at record highs pretty much, they're looking at that thinking that that's a high, where silver is still basically at its 1980 high today. which just doesn't make any sense at all. So why don't you take us through this presentation?
Yeah, absolutely. And the one thing I'll say as we go through it for our viewers to keep in mind is that silver has basically either been considered an industrial metal or a monetary metal. And we're almost seeing an emergence of a sort of a hybrid where it's like a security metal, like a metal of national security. So keep that in mind as we go through here.
Well, it's a metal that tech has to have. Tech can't get by without it. And at the same time, we're starting to see monetary demand, and this will increase as time goes on. We haven't seen the West interested. The West was selling while the East was buying, which I think is sad to see. But this is the one I was wrong on. I said that the central bank had actually purchased, and what they've done is India takes a historic step toward the remonetization of silver. They've made silver a metal that can be used as collateral in loans.
Exactly. So for decades, Indian households have relied on gold jewelry as a primary form of collateral for personal and business loans. The new rules expand that privilege to silver jewelry. So you can pledge silver for loans as well. So sort of recognizing that silver has a lot of value, it has monetary value, it's good collateral, but not quite the same as the central bank buying it.
It's interesting that they put it at 10 to 1 instead of whatever the free market rate is. 85 to 1 is what it is today. So they should, they're somewhat restricted, but it also tells you where they think it might be going.
Exactly. All right. So our second country here is actually Russia. So this is an article back in the summer from June. Central bank silver purchases, Russia leads smart money. So central banks are virtually absent from the silver market in 2024 and 2025, with one historic exception. Russia has become the first nation to explicitly announce silver purchases for state reserves during the current precious metals bull market, allocating over $500 million over the course of 3 years. So Russian central bank absolutely buying silver. They're leading the way, and they may incentivize others.
And if it goes down to, say, a ratio of 20, it means that they will be able to get over $2 trillion worth of gold for this $535 million that they spent on silver. So, they're not completely stupid.
I agree. Exactly. And our next country here, Saudi Arabia, the central bank invests tens of millions into silver. That was about $40 million. And they bought SLV and SIL. So two different ETFs, not the actual physical metal.
The headline should say that the central bank bought tens of millions of dollars worth of claim checks that represent, there's supposed to be representations of silver. But like I said in that original video where David asked me about this, SLV and the other ETFs, I just don't trust them. And the reason I don't trust them is because I read their prospectus and their 10K filings.
Yeah. So those are the three countries you talked about. We've got three more, and they're not explicitly buying silver, but they are treating it as a strategically important mineral. So let's take a look at those. China now restricts silver as a key mineral resource for export control. So basically, starting sometime in 2026, if you want to export silver from China, you're going to have to apply for a license so the Chinese government can restrict how much leaves its borders.
Yeah, this is part of the reaction to Trump's trade wars and tariffs. Silver is an incredibly important metal, and China is a major supplier, and that means that they can squeeze all of the tech. All of the AI infrastructure that's going in, all of the solar and batteries and things to power electric vehicles and so on. This all requires silver. And if the West is using more than it produces, and the world is using a whole lot more than we produce, stockpiles are getting low, and then China can put a squeeze on us. And this is part of the posturing and the battle that was triggered with the Trump tariffs.
Speaking of using more than we produce, here are the silver stocks in China. So here we have the Shanghai Gold Exchange and the Shanghai Futures Exchange. And what's going on in China kind of parallels what's been going on in the world. Basically, we had growing silver stockpiles until around the year 2020. And for the last 5 years or so, we've been using up those stockpiles around the world. So this could be contributing to what we just talked about.
Yeah, people are taking delivery. And so look at that huge fall in the futures. The physical shrunk, but the futures, the bets on physical shrunk by even more. People are not trusting the paper contracts as much as actually having it in their hands. So this is a reflection of investors being more nervous and actually taking delivery, pulling it off the exchange. And not just, it's the musical chairs occurring on the Titanic. And you've seen the movie with the little orchestra, that's a string orchestra that's playing. They do stop playing at one time or another. And by that time, there's not enough lifeboats left.
Maloney's point about central banks not being completely stupid is a useful entry into where the smart money has been positioning. Even the institutions that helped engineer this debt-heavy monetary system understand arithmetic. They recognize that silver trading near its 1980 nominal levels, while gold sits at record highs, reflects a valuation distortion that cannot persist indefinitely. The reclassification of silver as collateral in India, the explicit accumulation by Russia for state reserves, and the rising interest across the Middle East all follow a simple logic. If gold is expensive and silver is historically undervalued, then anyone looking to build monetary protection must begin with the undervalued asset. This dynamic becomes even more pronounced when the monetary and industrial worlds collide. As Maloney stresses, silver is evolving into a hybrid asset, part monetary refuge, part industrial backbone. Once policymakers treat it as a national security material, the incentive structure around supply becomes fundamentally different. Restrictions tighten, strategic inventories rise, and the free float shrinks, all before investment demand reaches its next wave. That sets the context for the second half of Maloney's analysis, where he examines how the United States, Australia, and China are positioning themselves ahead of what many expect to be a supply-constrained decade.
The good old United States of America, the U.S. Department of the Interior releases the final 2025 list of critical minerals. There's 60 critical minerals. Seems like just about everything is critical to the United States now. But they added 10 new ones this year, and silver has finally made the list. So silver is now critical. Who knows exactly what that's going to mean? It could translate into more legislation and regulation, but the United States is recognizing that silver is extremely important.
Yeah, and pretty soon it will be very profitable to invest in mining companies and so on, and to do the investment in all of that infrastructure. And the Silver Valley up in Coeur d'Alene, which is the largest deposit ever found, I believe, that area, a lot of those mines can be resurrected and improved. But for most operations, it's 10 years or more from discovery to production. I did a video on this years ago, the lag time that is involved. Silver goes up, then there's all this investment in the mining sector, and then it takes years for that silver to come to market. And so that happened when silver peaked in 2011, and the silver started coming to market by 2015, 2018, you saw increases. But then we went back into a structural deficit, even with that extra supply coming to market from all of those mines that were opened up or reopened, and we're running out. We've had this structural deficit year after year after year. And so this runs in these waves and cycles. But I don't know if even at $150 or $200 an ounce, if silver is going to catch up with demand over the next. I mean, you look at the AI infrastructure that's being built out and the demand that silver will have on it for all of this tech. And at the same time, people are rushing back to it for investment. And when you invest in something like Silver Eagles, you're taking silver off the market permanently. Nobody's going to melt down Silver Eagles to put into electronics. The premium on them is too high. Okay.
Exactly. And our final country, Australia. The government in New South Wales has published their critical minerals and high-tech metals strategy for the next decade, even though they just published it. It includes last year. Kind of strange. Huh. But anyways, in their report, they listed 5 priority minerals and metals, one of which is, of course, silver.
Wow.
And one of the things they said about silver, aside from all the industrial uses that you commented on earlier, they said, additionally, silver has strong demand as an investment product, parentheses, currency. And I just thought this was interesting. And I thought, man, It's supposed to be money, not currency, and it's not really an investment product. It's savings, right? You're trying to preserve your wealth. But anyways, this is classic government.
Okay, so yes, it is money, not currency. And, it can be a currency. Right now, it's not being used as a currency, but it is money because it stores value. However, I've often said that there are these brief moments in history where the precious metals become not just the safe haven asset where they are savings, but the asset with the single greatest potential gains in purchasing power. And that is investment. So I would argue that during this period of time, during the bull market, that it is both savings and investment simultaneously. It's a safe haven, it's savings, it's investment.
Well, we can summarize all those things that we just talked about with a wonderful tweet from Hansa Czerny. Something big is happening with silver. First, China restricted exports. Then the United States classified it as a critical mineral. Now Australia names it as one of its 5 priority metals in its 10-year strategy. 3 continents, same signal. Silver isn't just an industrial metal anymore. It's becoming a cornerstone of national security and energy transition. When governments start guarding silver, stackers already holding it are ahead of the curve.
Yeah,
Perfect.
And it is perfect. It's not just a cornerstone of national security and energy transition, but it's developing a monetary component right now. And I've often said that that is what is required for the triple-digit silver that I believe is definitely in our future. I'm betting on at least $200 an ounce, but we could see a spike that goes up toward quadruple digits.
Yeah.
We don't know. When we did the analysis in my book, our book, you were involved in a lot of the research in this. And we did the percentage change in all of these different asset classes from January of 1980 to today. And the biggest one is if it had the same percentage growth as the Wilshire 5000 stock market index, it would be $2,178 per ounce. But the average of the consumer price index, median price home, Wilshire 5000, the 10-year Treasury bond, U.S. GDP, and currency in circulation, and the M2 currency supply growth was $921 an ounce. So I don't think this 661 that this chart is pointing towards as an echo. This is like history repeating. It's an echo from the past and just adjusted for the devaluation of the dollar. I don't think it's unreasonable.
Maloney's closing arguments build directly on the recognition that silver's industrial burden is no longer cyclical, it is compounding. The United States' decision to label silver a critical mineral is ultimately a response to the accelerating demands of AI infrastructure, defense modernization, renewable energy programs, and electric vehicle manufacturing. These sectors represent long-term, non-negotiable consumption. No nation can simply cut back on the metals required to run its grid, defend its borders, or compete in high-tech manufacturing. That means industrial demand will keep rising regardless of price, while mine supply, constrained by decade-long development timelines, cannot catch up quickly enough. He also highlights a reality that many investors overlook. Every major supply surge in silver's past was the result of investment-driven capital expenditure, not natural abundance. After the 2011 peak, it took years for new and reopened mines to replenish the market with fresh supplies, and even then, the industry slipped back into deficit. Today, the situation is far more constrained. Discoveries are fewer, ore grades are declining. Even a price of $150 or $200 an ounce would struggle to generate enough new production soon enough to satisfy demand for AI data centers, solar installations, and electrification programs. The deficit is not a temporary imbalance, it is a structural condition. Layered on top of this is the monetary reawakening inside government institutions. Nations that once ignored silver are now calibrating their policy frameworks around it. China is restricting exports. India is monetizing it through collateral rules. Australia is elevating it to strategic priority status. The United States is finally acknowledging its critical importance. When multiple governments across 3 continents arrive at the same conclusion simultaneously, the market rarely remains quiet. For investors, the message is clear. silver is entering a phase where industrial necessity, monetary relevance, and geopolitical strategy all point in the same direction. Maloney's upper-end price scenarios, from $200 to the potential for an explosive spike into the high triple or even quadruple digits, are not speculative guesses. They are extrapolations based on long-term structural imbalances, monetary debasement trends, and the percentage growth silver has achieved in previous cycles. Whether one agrees with the magnitude or not, the trajectory is supported by the underlying fundamentals. Thank you for watching. If you found this analysis valuable, please subscribe, leave a comment with your thoughts on silver's trajectory, and share the video with anyone tracking the precious metals markets. Your support helps the channel grow and ensures we can keep delivering these deep dives into the most important financial developments shaping the global economy.